Jumping, let's ride around. Won't let up off the gas till they feel my sound. You better know we here to stay. It's overtime on the line every day. Jumping, let's ride around. Won't let up off the gas till they feel my sound.
Hey, check it. Chella Wealth, you now on the air. Time now is 9:01, running a little Friday night special. How y'all doing out there? It's me, my man Jordan. We over here, one of our many podcasts that we run, you know, DK, Boyd, Aaron, Trilling, whatever the fuck you want to call me, man. It's me and my man Jordan. We're out here talking to you folks. Chella Wealth, you know, one of our little side, I don't know what you'd call it really, but one of our niches. You know, we got a couple ecosystems out there. So what we're doing is we're building communities. We're building communities on the wealth side. We're building it on the entrepreneurial side, which kind of goes hand in hand. But again, thank you guys for coming in on this Friday night. Boy, if you guys are listening out in San Diego, woo! It is raining. I don't think I've seen this much rain since I came home today. My parking structure is shot. We have like these little carports, you know. I'm sure you guys are all familiar with these carports. Well, there's like, each one holds about 6 cars. One of them completely tanked. It was like the water got to it. It's an older complex. Looked like the water seeped in, the wood gave in, came crashing down on 2 cars, one of which is completely totaled. The other one, believe
go. You folks, I don't know what happened. My computer that I'm running our show off of completely screwed up. But I got my video editor, my partner in crime right here. He's going to edit that out. Anyway, I'm just going to pick back up where I was talking about. It's crazy weather out here in San Diego. That's all about that. But, you know, we talking Chilla Wealth over here. You know, Jordan and I, when we talk about these shows, we talk about the ability to really be financially intelligent. And it's really remarkable to Jordan and myself how remarkably unintelligent people are financially, fiscally, and whatnot. And, you know, we reference back to a key guy, Robert Kiyosaki, who very famous, critically acclaimed book, Rich Dad, Poor Dad. And, you know, he's got a great motto where he says, don't work for your money, let your money work for you. And we've talked about kind of real estate and really how that's the end game right there. I mean, you can make so much money and live off just being a real estate investor. Yeah, I mean, does it require some work? Certainly does. What doesn't, you know? But if you can really study the game and learn from, you know, a mentor, if you could be so fortunate, you could really have a leg up in the game. If you don't have a mentor, that's okay. I mean, you could still do it if you wanted that bad. I mean, you could dive in, you know, you could talk to people, you can make mentors out of people. You might have a mentor actually that doesn't even know that they're your mentor. So that's great as well. Right now I'm reading a book on how to be a real estate investor. Pretty generic. It's from the Freedom Mentor. That's his publishing name. But it's still Pustajovsky, a Polish guy, great guy. Follow him on YouTube. Guy just breaks it down. He breaks it down. It's so simple because you think about, you know, being a real estate investor. There's all these chutes and ladders, and I got to get a master's degree, a doctorate. I got to go to school. No, you don't. You really don't. Yes, there are some complex things in it. If you're a very sophisticated and savvy real estate investor, but he really, really breaks down just the black and white nuts and bolts about it. And I suggest you guys get it. It's an easy read, very easy read, not more than 200 pages or so. How to be a real estate investor, again, by Phil Pustajovsky. But on the other side of real estate, which kind of goes not hand in hand, but definitely a related subject in real estate is the mortgage side. Mortgage lending. I happen to be a loan officer for a big bank myself, and it's really interesting because, you know, what I'm doing right now is learning how to be a real estate investor, and being on the other side of it, you know, getting these people these homes, these first-time home buyers to these savvy investors. I mean, from everybody comes to me that wants to buy homes. I get from all walks of life. Either if it's a primary residence, if it's a second home, if it's a vacation home, or if it's, if it's a rental property, if it's an investment property. So, I get to see how the things are working in the back office on how banks really fund loans for these people, which I think in turn, a couple of years down the road when I start buying property will really be beneficial to me, just so I kind of already understand the structure and pricing of a loan, mortgage insurance. There's a lot of key things that is pertinent that you've got to know. And sometimes the rate on a loan is not necessarily the best. So if you're getting like 4% and someone's charging you 4.125%, it depends, again, by scenario, but just because you're getting a lower rate doesn't mean that 4% is actually better, because there's what's called closing costs at the end, which is a whole lot of stuff that can range anywhere from $5,000 to $10,000, and based on points. And I just want to introduce something real quick first, folks. If you guys are new or experts on mortgage lending, great. I am no expert by any means. I'm learning the game. But one thing is for certain, rates do not change. Rates never change. 3.5% is always 3.5%. 4% is always 4%. Rates on mortgages never change. What does change are the points. Banks charge points. That's how banks make their money. Banks say, hey, if you want 4%, hey, we can give you 4% based on credit, based on a couple things that I'll get into in a minute. But it's very important to know that rates don't change, folks. It's the points on the rate. So if you're giving, if a 4% on, point, a half a point, what you're actually doing is the bank is charging the borrower 0.5% of the purchase price. So if it's $800,000, if you're buying a home $800,000, you're going to pay the 4%. But that 0.5 of a point, that half a point that's being charged, is actually what's called the origination fee, and that goes completely to the bank. Now, you can also, on the flip side, get negative points, and those are discount points. So if you get 4% when the market's good, you want 4%, and you have negative 0.5, give you a half a point, then that is a credit. So obviously that number is going to be a negative, and let's say it's negative 5,000. Well, that 5,000 is called a lender credit that goes to the borrower, which will actually in turn go to closing costs. You see, folks, you can't get rid of closing costs. Closing costs are always in there. They are government fees. They are bank fees. They're appraisals. There's a lot of stuff that's really dry, but you can't get rid of the closing costs. They're paid. What you can get rid of is the offset through the points. So if you're getting 4%, and you're actually getting what's called a discount point in the negative. I know we should be a little visual here, but you have a $3,000 to $4,000 credit, like minus $3,000. If we do the math on an $800,000 home, that minus $3,000 or $4,000 gets credited to your end closing costs, which is really important sometimes. I know that was really cut and dry right there. I could have probably explained that a little better. Again, if I had a whiteboard, it'd be great. But what's important to know when you're buying a home, and I don't care if you haven't bought one or you've bought 1,000, what's important to know is there's 4 things that's involved in mortgages. And again, for people that want to buy a house for the first time, or that are people who are already savvy real estate investors, they know this. But it's very important, your FICO score. FICO score is a credit score, just another name for it. It's Fair Isaac's company, whatever. It's your FICO score. It's your DTI, which is your debt-to-income ratio. It is your LTV, which is your loan-to-value. And it's your post-close reserves that you have just in case something happens and you go out of work for something. And the bank wants to know. The bank is not going to give you $600,000 loan unless you are good for it, and they make sure you are good for it. Loan to value is just the loan amount that you're taking out on the bank. So if you have whatever you put down, your loan to value is the difference. If you buy $1 million home and you're putting $100,000 down, that's 10%. Your loan to value on that house is 90%. And the higher your loan to value, the more risk you have to the bank. So you want that loan to value to be low. I mean, if it's 80 or below, that's great. Banks look at that as being what's called ideal. Generally, certainly in the state of California, if you have 20% down, which would be 80% loan to value or more, you do not have to pay what's called mortgage insurance, because if you put anything less than 20% down, you're more risk to the bank. The bank wants to make sure you're going to get paid. You're not putting a lot down, so the bank says, okay, Aaron, you're only giving me 10% off this $1 million house. I'll throw this $100,000 down. I'll let you put down $100,000, and I'm going to give you this $900,000. But I'm not going to give you this $900,000 without taxing you on top, which is called mortgage insurance. Mortgage insurance can range from $100 to $400 to $500 a month extra. So, there's a very interesting kind of cost-benefit analysis you want to do, and I really recommend that you guys go out there and do more research, because, I'm just scratching the tip of the iceberg, scratching the surface with all of this. So, you want to know, obviously everybody wants to get the best rate. Everybody's like, oh, what are your rates? What are your rates? What are your rates? People ask me all the time, oh, Aaron, what are your rates? What are your rates? What are your rates? I hate that question, because it's not even a question. It doesn't even make sense. They haven't told me anything about them. They haven't told me their income. They haven't told me their FICO score. They haven't told me anything they put down. They come to me and say, oh, Aaron, you work at such and such. That's great. Me and my wife are looking to buy a house. What are your rates? What does that even mean? That's how you know right then and there that somebody just doesn't know what they're talking about when they ask for rates. So again, I really want to make this clear. The core four that is important as a borrower when you go to a bank, you must have a good FICO score, which I'm realizing more and more people have really good credit. Now, something like the credit card companies, they'll give you a credit card, and you need a lot less credit to buy a car. You can get by with buying a car with not as good credit. When you buy a house, your credit's going to have to be good, and if it's not good, you're going to pay for it on your rate. Totally lost track of what I was saying just now, and I know that was a lot. It was a little information overload, but it's really important. Oh yeah, the core four: DTI, debt to income, which is how much of your monthly mortgage is coming from your income, a percentage. So if you have all your stuff, you got 40%. If your DTI is 40%, that means 40% of your income monthly is being spent on your rent. And, you will have, there's between guidelines. Every lender is different. But you want to definitely have that number under 50. If it's under 40, that's even better. Loan to value, like I said, FICO score is huge. That's going to base a big part. And then your post-close reserves, because they're going to want to see if something happens, you got the money to back up if you do go out of work. Jordan, anything you want to talk about right there? Sorry, I just absolutely rambled right there, folks. I'm so sorry. I hope you guys were taking notes. Jordan, I hope you were taking notes too. You want to talk a little bit about whatever you want to talk about? You've purchased property in the past, so you're going to probably know this more. You've witnessed this firsthand. But what do you got, man? What do you got?
Yeah, no, really, kind of where I'm seeing like a big, value shift in kind of the content we're putting out is through, like our journeys, specifically at this point, your journey, diving into the mortgage industry to, it's tripping me out because it makes me feel like I've almost, I'm working with the dude like, undercover now. You're working undercover incognito. We got Bank of America. We got people on the inside. So it's mind blowing, or as my cousin likes to say from Pennsylvania, he just came from India. It's mind blogging, that we've got people on the inside to such a depth to share this type of information with us, because it's not often that we can hear from, an insider what exactly is going on in such a, I don't even know how to word it, but in such an industry that can have such a ripple effect, right? In 2008, this is the industry that caused such a quake through the economy, the mortgage industry. You know what I mean? So it's something to really take note of when Aaron is sharing, these things with everybody, as far as, and I know you're just, like you said, man, just scratching the surface, just getting into this thing. So I'm really excited to see, the type of insight that you have a year into this thing, couple years down the line, 5 years, 10 years down the line, because this information is actually, it is extremely, valuable beyond anything else that, you guys can come across for the most part. And I say that being just, the same guy as you, as Aaron, as, everybody. And what I've seen and what I've personally experienced is, and we're not trying to sell you anything. We're just sharing with you, we've felt in our lives. And the reality is, I have the largest amount of money that I've ever made in my life was through a real estate transaction, not through busting my ass for hours on end, working, 16, 18-hour days. That's not what brought the largest return on investment, but the real estate that I purchased at a certain price and sold at a certain price is what brought the greatest return on my investment. So that's just something to share with everybody, that if you put yourself in the position to be prepared to meet opportunity when opportunity is presented to you, you can have a very solid return on your investment. And if you're listening to this, then clearly that shows that you're a like-minded individual, and you are seeking a way to accumulate wealth and generate wealth. And on this, we're talking not just financial wealth, which financial wealth is paramount in everybody's life. And, if you say otherwise, that financial wealth is not, more power to you. But the world that we live in, at least the world that myself and Aaron are living in, requires financial stability. If you want to have a wife, you want to have children, you want to live comfortably. You need to have financial stability. It's just a fact. It's not something that, that we're trying to sell you on. It's just a fact. And like Aaron said, I just want to touch on what I'm reading right now. To touch on, again, Robert Kiyosaki, I have right here 8 lessons in military leadership for entrepreneurs. And I believe that anybody can benefit from this book, not just somebody who's in the space of entrepreneurship. Because if you really look at it, an entrepreneur is somebody who is, in my eyes, just paving a way and paving a path. And if you work a 9 to 5, you're still paving a way and paving a path for yourself. And if you think otherwise, you're only kidding yourself. Every single one of us on this planet are playing the same game, whether you're working a 9 to 5 or whether you are working for yourself. It really makes no difference. every day, your job is to push it to the limits. Push it to the limit of what you are capable of, regardless of which organization you're in. You have a duty and a responsibility to operate at a higher level. And real quick, I just want to share this with everybody. This is what kind of grabbed me out of the book, but I would recommend the book to everybody, 8 Lessons in Military Leadership for Entrepreneurs. So Robert Kiyosaki, he has an illustration, the 4 cornerstones of discipline, turning coal into diamonds. There's basically a diamond, just if everybody could kind of visualize a diamond-shaped object. And at the 4 points, on the upper point, we have mental. To the right side, we have physical. To the bottom, we have spiritual. And to the left side, we have emotional. So discipline is what impacts all 4 of the cornerstones. Turning coal into diamonds requires pressure, compression, and tension on all 4 corners. And this is something which, it's okay to not recognize because of the world we currently live in, where we think that discomfort or any type of anxiety-like feelings means that something is wrong. But if we just take a little flip on it and realize that maybe those feelings of discomfort and anxiety are actually putting pressure on us to turn into something better, right? Turn from from coal into diamonds. So that's kind of what I wanted to just share as far as the wealth of the mind, right? Because we have financial wealth, which is a byproduct of our mental wealth, our these 4 corners: emotional wealth, our spiritual wealth, our physical wealth. So the financial aspect of it is just a reflection, in my eyes, is just a reflection of these other cornerstones in life. So, it's not just a monetary thing. It's your entire being. And that's just kind of what I wanted to share. Aaron, you want to share anything on that?
I'm just looking him up right now, and because he's just great. Of course, his flagship book is Rich Dad, Poor Dad, but this guy's got a lot of books. I was thinking about which book I was going to read next of his, and I'm just stressed out. But he's got some good stuff. Yeah, and I completely agree with you on the there are different types of wealth: the financial, the physical, emotional wealth. I mean, that's huge. I think if you're emotionally wealthy, that it is more than just the financial. I think I was thinking a little one-dimensional there, but there's many different forms of wealth, and when you have the other ones, with the determination of getting the financial, oh man, what a great life. Actually, he has got some workshops coming to San Diego for our local listeners here, and you guys can check out other locations on richdadeducation.com, but definitely some things to look at. I don't know if he's going to be there or if this is maybe he has some people that work for his company, but I'm just kind of looking at that. Joey, we should probably go to some of these, dude. These are like on Carlsbad, Hilton, Mission Valley. I mean, there's one right by my house. Crazy. But yeah, very important just to be, just wrapping this all up. By the way, it's 9:29. You guys are listening to the Chella Wealth podcast. Me and Jordan, we're talking about, again, on the topic of financial intelligence. We went into a little detail about real estate investing and mortgage lending and how they're related. But it's very important to buy a house. It's very important. I think everybody should do it. I don't personally own a home right now. I never have. but I'm in the mortgage lending business, and I am a loan officer for a fairly large bank. And I can only tell you that it's great because it stabilizes yourself. The government wants you to have a home, actually, because it stabilizes the economy. People that own homes tend to be in line. You know, they tend to stay out of trouble, especially they have a family. When you buy a home, it really is a positive in a family's life because it makes them stable. They don't want to lose that home. I mean, you know, we all saw 2008 roll around and everybody defaulted on their mortgage, but that was something entirely different. But when you buy homes, it makes the economy stable. It does. You know, you can talk about creating jobs and whatnot too, and that's a fundamental underlying foundation of a good economy too. But when people are buying homes, it's very good and it helps many fold. So another reason why it's important to own a home is, well, there's some tax reasons that are beneficial that we'll cover next time. But totally lost my train of thought on the topic of owning a home. Oh, you can build what's called equity. And equity, for people that don't know what equity is, that is the difference in price in the amount of what it's worth now than when you paid for it. And it's only equity if it goes up. There is negative equity as well, but generally speaking, when you look 10, 20, 30 years out, land generally, for the most part, will appreciate. It takes its dips like the economy does, but it's always, like the market, they always go up in price. They really do. I don't want to say always, but I'm going to say always. It always goes up in price. So if you buy a home for $500,000 and it moves to $650,000, you have what's called $150,000 of equity. And that is great. Now, you can do a couple things with that equity. If you're short on cash and you want to do something and you want that equity, you want that $150,000 without selling your house completely, you can take that out. You can do what's called a home equity line of credit. And that's called a HELOC, HELOC. It's a home equity line of credit. And you can also do a refinance. You can refinance your old loan that you have, and people generally do refinances when they think they can get a better rate. So if somebody bought a house in the year 2000 for at 4.5%, and it was an $800,000 house, and they threw down whatever on it, and they owe $700,000. 5 years later, they realize that they can get that down to 3.5%. They're going to refinance that house, so they're going to have the bank pay off the existing loan, and then you get a new loan. And then you start from where you're at because you're already making payments on the house. So it's just a new loan. It's a payoff of one, and you start another with a lower rate. And on that, going back to equity, you can do what's called a cash-out refi, a cash-out refinance. You can do two things. You can get it down, get your rate down, and you can pull out money for equity. A lot of families tend to do that when they're, strapped for cash and they want to do some redecorating of the house. They want to put some money in for college, for their kids. Many reasons come up that require a want or a need for some extra cash, and owning a home can get you that, and it's very important. So it's more than just putting a roof over your head. There's many advantageous reasons as to why to really own a home. Again, one of them being taxes. But as we come to a close on this, I really, Jordan and I both, we really think it's beneficial because this is stuff you just don't get taught in school. Okay, they just don't. They don't teach you this in school, and that goes back to one of our theses about the education in this country. Even in college, I didn't learn a whole lot about this. I just happened to be in the industry, and take it from somebody in this industry who can tell you that, I mean, this information is gold. It's paramount. And it's a must if you want to get into real estate investing. Now, what I've covered in this kind of last 30 minutes of this podcast is the traditional way to go about getting a mortgage, the traditional way to, invest. Now, there's other ways. There's other loans out there. There's other loans out there that banks will not do. And those are called hard money loans. And actually, Jordan and I are going to get into that next week. And this is an ongoing thing, you guys. I spat out so much word vomit right now. I apologize, but I had to get some crucial, fundamental facts and statistics out for you guys. And I really do encourage you guys to keep diving into this. I think Investopedia is a wonderful, wonderful, wonderful resource. Breaks it down in layman's terms, like this guy, Phil Pustajowski. God, I wish he had a better last name. But he's wonderful as well. Just put in Phil P-U-S-T, Pustajowski. Just try and figure it out. It'll come up on Google. Wonderful, wonderful. Breaks it down in layman's terms. Great books. And really, if you want to start from the bottom, because don't think it's like hectic. I mean, it is a complicated, sophisticated area of study, but if you really want to just get your feet wet, I really just want you guys to jump on Investopedia, Wikipedia, look at YouTube videos. I mean, if you're a visual learner like I am, I mean, you can only get so much from reading a book. Look at some YouTube videos. I mean, it's great. YouTube is wonderful. So we're not done here at all, folks. We'll probably run a big old series on this like we have, but this is Chella Wealth. And we just want you guys to be wealthy. We want you guys to be financially intelligent because there's too many people out there that are not exercising their financial. What am I looking for? Their financial successes. Because everybody can do it. You don't need a lot of money. If you have money, great. If you have money, great. I'm going to say that yes, you are at an advantage, but you don't need it. You don't need it. You just got to be smart. You got to look at the markets, and you got to be smart. And you don't need a bachelor's degree, a master's degree, and you certainly don't need a doctor's degree. So, and they don't teach you this in school. They just don't. It's a lot of work, but very, very well worth it. And again, this all goes back to Robert Kiyosaki's motto as far as you're having your money work for you. And in certain times like this, the bank is your friend. In the next episode, we're going to talk about some leveraging, how you can leverage yourself to not throw down a bunch of money and use the bank's money, because that's great. Use somebody else's money on a little bit of on some interest. It's great. I mean, it's wonderful, and it's a topic is needed to be discussed more and more. With that, I'm all done. I got 9:37 over here. Thank you guys so much. Jordan, any last closing remarks that you wanted to leave with us?
Yeah, I just want to say again how important it is to, just take note of all this information that's coming. Like I said, again, from somebody who's working on the inside. Aaron is working, with the Bank of America. I'm sorry, I don't know, Aaron, if that's okay to advertise that, but if you are looking to purchase a home, or if you're thinking about purchasing a home, or you thinking about purchasing an investment property, now would be a good time to, reach out to Aaron and kind of, get a little bit of insight as to how this thing works, because this is the bottom line of this show tonight, and of, everything in a broader perspective. If you're looking to make some type of monetary progress in life and create wealth for yourself, for your family, for your future generation, because you're not here for yourself. If you think you're here for yourself and you're here on this planet just to live your own life and just to pay the electricity bill, you're kidding yourself. Wake up. This is something much bigger than that. And, we go to history, historically, you can find where wealth has been made. Don't listen to us, do the research yourself. Look it up, on Google, read a book. Where has wealth been made historically? I know, we're living in very different times right now. I mean, we're living in a crazy world right now. I mean, people are making money off of apps and all kinds of things, But historically, if we study, what has happened before us, because we really are standing on the shoulders of giants. We're really standing on the shoulders of giants. If you look back, historically, wealth has been created over and over through real estate. So if this is something that sounds interesting to you, and if you find it to be, something that you want to explore a little further, reach out to Aaron. We're here to, just share with you guys. We're interested in what deals you have going on because, we're all students, until they put us in the grave, we're all students. So, we have something to share and you have something to share. So, one thing's for sure is that wealth has been created in real estate, and, this is something that I hope to further explore in the near future. And Aaron is currently exploring on a daily basis. So if it's something that interests you, reach out, and we'd like to connect with you. And that's about all I got.
Cool, man. Yeah, me too. You guys join us next week. You guys have a great weekend, and we'll be back on Thursday night at 9. See you guys then.
Jumping, let's ride around. Won't let up off the gas till they feel my sound. You better know we here to stay. It's overtime on the line every day. Jumping, let's ride around. Won't let up off the gas till they feel my sound. You better know we here to stay. It's overtime on the line every day. Ride around, let's ride around. Ride around, let's ride around. Ride around, let's ride around. Let's ride around, let's ride around.
All aboard, captain of the ship, bro. Waves of turbulence, no, I'm not gonna flip, though. Destination's a must, I will not let go. Scared to take a lick, then what the fuck you getting wet for? Hold up, man, no, it's not the same game. Things change, we must do more than maintain. From Cali to Chad to Moscow, Prague, and Maine, Spain. Cape Wood and Praveen, the one that's fucking up the mainframe. Precious the essence, so let it bring its presence. You want some king shit, leave the rat race to the peasants. So stay on your grind like Musker back in 98. Cause you ain't about the side, you about that motherfucking plate.
Jumping, let's ride around. Won't let up off the gas till they feel my sound. You better know we here to stay. It's overtime on the line every day. Jumping, let's ride around. Won't let up off the gas till they feel my sound. You better know we here to stay. It's overtime on the line every day. Ride around, let's ride around. Ride around, let's ride around. Ride around, let's ride around. Let's ride around, let's ride around.
Back again at it, had a couple days off. Double up the wins just to make up for loss. Time ain't money unless you invest it right. So every time you hit the bottom, you'll see new heights. Never looking at them, focused on us. Head down, working on an all-out rush. You see the road, make it lonely at times. No hope and waiting for signs, let's just get back to the grind. Desperate times call for desperate measures. It's mental warfare, get desperate clever. Can't let up off the gas, not now or ever. Look, life's an overtime, learn to love the pressure.
Jumping, let's ride around. Won't let up off the gas till they feel my sound. You better know we here to stay. It's overtime on the line every day. Jumping, let's ride around. Won't let up off the gas till they feel my sound. You better know we here to stay. It's overtime on the line every day. Ride around, let's ride around. Ride around, let's ride around. Ride around, let's ride around. Let's ride around, let's ride around.